Welcome back to Under 450k. And in this video, I'm going to explain to you why every single property guru and every single buyer's agent is lying to you. Because every now and then you will see ads like this, and this pop up. And it seems like you're missing out on massive growth and everyone is getting their bag and you're left with absolutely nothing. They are somehow securing high yielding properties with great cash flow as well as securing hundreds of thousands of dollars of worth of profit. But the reality is that is all just social media hype. And because when we start to compare property from like 2022 to 2025, the game is vastly different. Because if I just have a look at the property here in 59 Brainbridge Street in Heatley of Queensland in 2022, this was sold for $275,000. And by the way, Heatley is in Townsville, which is a very, very hot market at this point in time where investors are still buying into the market. Now, this is a very average sort of looking investment property. Decent interior, could do with some rework on the inside with nice new carpets and a bathroom refresh. However, even a property like this, when you look at the older listings or the way you look at how much rent is received for that property back in the day, you can see the average price is around 370, maybe 310, and even 350 for a property like this back in 2022. And when we look at running the numbers, you can see that the yields are vastly different. And so when I put this property into my property portfolio summary sheet, we can see the property is $275,000. On a 12% deposit, you only needed $33,000 as a deposit, and as in your total cash and equity, you needed about $50,000. So you could get in the market in 2022 for $50,000. That's absolutely crazy. And say we had a rent of $370 or maybe even a bit less, $350. You can see we're barely negative cash flow even after all expenses. And if we had a bit better of a property, we can get to a positive cash flow scenario. That's absolutely insane in 2022. Now, of course, interest rates are a bit lower as well, which I've rightly inputted in here, and I put the property management fees at 9%. That's at a 12% deposit. So if I had 20% deposit, which is around $70,000, you can see I'm almost making $100 every single month in the positive. Tell me where in 2025 you can get that sort of deals. It's not possible, but BAs and property gurus still push this narrative. And you can also see you're achieving around a 6 to 7% yield pretty easily back in the day in 2022 during COVID. And this is the era where we made easy money, right? Whenever you bought anything, it was just really easy money. And to put this into perspective, let's have a look at a sort of similar property in 2025. You can see it also needs a bit of a freshen up. Carpets, bathrooms could do with a freshen up, but this one does have a nicer pool as well. So not sort of nice pool, but a pool nonetheless. You can see it was sold on 15th of January 2025 for $485. Once again, let's put this in our property spreadsheet. You can see I have the address there. 485. Your total loan is going to be around $82,000 on a 12% deposit. Interest rates are much higher in today's environment, which is around 6%. When you start to look at the rough rental areas for Heatley, you can see 480, 550, 500, 470. So I conservatively put $500. And I've also adjusted the insurance counter rates to be a little bit higher because it's 3 years into the future now. We can see the rental yield is only 5.36. The total cash flow per year is negative close to $800 or negative $10,000 yearly before tax considerations. That's a vastly different figure to what you can see in 2022, where we can almost get a positively geared property right off the bat. This is the stark reality of investing into property in 2025. It is not the same game that we were playing in 2020, in 2022, when a lot of investors and buyers agents made those extraordinary results. The real test of these property gurus and these buyers agents will be from 2025 onwards, when things aren't so nice, when yields aren't so great, where everything has gone through a massive growth cycle. We will see their true value and their true potential about whether or not they can buy in the right markets. There really is nowhere left in Australia, in a major regional hub with around 100,000 population or more, where you can actually secure a house for above a 6% yield. It is incredibly difficult unless you took upon a renovation project or you added a granny flat in the back and then pushed it out to rent. Then possibly you can achieve that 6 to 7% yield. But it is very, very difficult. The new benchmark for buying property in 2025 really is $500,000 $500,000 or more to actually secure you a half decent property in one of these regional hubs. It is incredibly difficult to find properties under that mark in a big regional town. Now, of course, you can go to a small regional location like Hamilton, for example, and buy properties for under $400,000. However, these have higher risks and will depend on where the investor is on their journey about whether or not they should be investing there. And I think an important point to make as well is that even though we are quite negatively geared at this point in time, there are two things we will bet on in the long term. One, interest rates will go down, and number two, rents will rise. So say for example, this property starts to increase in rent over the next couple of years, goes up to 550, and interest rates come down and you begin to refinance it, and it comes down to say 4%. We are already looking at a much better position in our life. That is a very quick example of showing you how a negatively geared property that you buy in today's time in 2025 can become positively geared in the future if interest rates go down and if the rent rises that you expect to happen will happen. And I want that to be very clear. So even though we are very negatively geared, it does become or eventually could become positively geared in the near future. And by the way, if you're sitting on the sidelines about buying property in 2025, it is so important that you still do, because the situation is only going to get worse for people and the people will be left behind every single minute. We are already in a housing crisis. Prices are still going to go up. They're going to go up in the right places at the right times, and you need to be there to capitalize on that opportunity, even though these properties are negatively geared. But I want to set your expectations right, and that there are no longer properties for $300,000 at a 7% yield in Townsville, which are waiting just for extraordinary growth. That's not reality. But before I go any further, if you have not already, make sure you are subscribed to my private community. We go through different locations every single day, talking about where the best deals are, where the best capital growth is, where you should be investing, whether it's in Victoria or Queensland. And we have over 130 members discussing different points. And not only that, there's many resources online in the Whoop community which you can use to actively accelerate your property journey. So it's an absolute no-brainer. Make sure you join if you are buying property in 2025. And if you have not already, make sure you are subscribed to my free newsletter. I go to a different location every single week. It's absolutely free. It makes sure you are on the ball. Let's get back into the video. Now, if you've been listening to me the past 6 or 7 minutes, it might have seemed like all doom and gloom and you can't get these amazing deals and you're in a very terrible position. The truth is, you're not. You still want to be buying hard assets like property to secure your financial future. But I want to sort of play out a model of what that can look like. So say you buy a $500,000 property at a 12% deposit at a 6% interest rate. If over the next 5 years you can achieve 35% of growth or 7% annually every single year with a minor 3% rental growth, starting at around $450 or $500 rent, you can be in a very good financial position. And you can see over time that this number reduces because of rent rises. Now, this model doesn't actually calculate all the expenses like insurance, property management fees, and all the other fees associated with holding a property. But you can see by simple rent rises, your property could be positively geared over the time period on purely interest only payments. This mortgage per year is interest only. And even though you are positive by the year 5, you probably still are in the negative because of insurance costs, property management fees, etc. However, your net cash flow will be in the negative, so your property will be negatively geared over the 5 years. However, if you achieve the right suburbs and you get the capital growth, your net position could be anywhere from $150,000 to $200,000. And that's a huge win for you because you can take that equity, do something else, or you can sell the property and buy a Ferrari. Who knows what you like, right? But that is a reality. And say you do even better and you get 50% growth over the 5 years, you'll be in an even better financial position. And 50% over 5 years is still very possible. You just have to look at whether your $500,000 asset could be worth $800,000 in 5 years. Now, of course, this doesn't adjust for inflation. However, it is a simple model which can explain to you how your negatively geared property can make you money in 2025 or in 2030, realistically speaking. So if you're sitting on the sidelines thinking, damn, this property is negatively geared by a lot of money, what should I be doing? Well, let me tell you, what you should be doing is getting in the market. You get into the market while times are tough, while interest rates are high, and while rents are still not as good as yields as you expect it to be. Because if you get in now, the situation would only get better, or ideally only get better. We never know with interest rates. But at this point in time at the recording, we are looking at interest rate cuts. And by the time this video is released, we might even have an interest rate cut, which will already make that situation a little bit better for you. But the reason I created this video is to set your expectations in a realistic manner. You are not going to achieve the results of Perth. You're not going to achieve the results of Townsville. They've already happened, and the game has changed from 2020 to 2025. So be careful who you listen to, which property guru you listen to, and which buyer's agent you listen to. Not all of them are good, not all of them are bad. But I want to set your expectations realistic so you can achieve your goals in property in 2025 for you and your family. And if you need that extra bit of guidance and you need that extra help, make sure you are joined to the private community. Make sure you get some help from everyone and myself about which areas you should be investing into. It's an absolute no-brainer. Till next time, thank you.